A warm welcome back from the weekend, everyone. I am Melissa Enoch, and this is Your Money Moves Monday.
And I am Grace Agbaragu, here at the FMDQ Archives in Lagos. It's Monday, September the 22nd.
Let's now tee off with your news now. Monday, Nigeria has announced the country's gross domestic product growth of 4.23% in real terms in the second quarter ended June. In the latest report released today by the Statistics Office, the net value of the Nigeria's products and services was higher than the 3.48% posted in the same period of 2024, based on a rebasing done by the Statistics Bureau. During the second quarter, agriculture sector grew by 2.82%. The services sector recorded a growth of 3.94%. The industry sector grew stronger by 7.45% in the rebased GDP report. Aggregate GDP at basic price stood at a nominal terms of 100.730 trillion naira, a 19.23% growth over the lower 84.4 trillion naira recorded in the second half of June 2024. In Kenya, the central bank has launched a banking sector cybersecurity operations center to strengthen defenses against growing cyber threats. The center, operating under CBK Cyber Fusion Unit, will provide threat intelligence, incident response, digital forensics, and cyber investigations. All banks are now required to report cyber incidents within set timelines, with CBK stressing that full collaboration is crucial to safeguard the resilience of Kenya's financial sector. In Ethiopia, Sinke Bank has signed a 5-year partnership with MasterCard to expand digital payments and boost financial inclusion. Under the deal, Sinke has launched MasterCard-branded prepaid cards, becoming the first bank outside Premier Switch Solutions network to do so. The cards are designed for users without traditional credit or banking access, lowering entry barriers and opening up global commerce, travel, and online transactions to more Ethiopians. In Zimbabwe, the First Capital Bank has announced plans to dispose of its 50% stake in Makasa Sun Limited, owner of the Makasa Sun Hotel, formerly the Kingdom Hotel, in Victoria Falls, Zimbabwe. The bank and its co-shareholder have entered negotiations with a potential investor for the proposed disposal. Shareholders have been advised to exercise caution when trading the company's shares until a full announcement is made. In Uganda, the National Social Security Fund has hosted a forum for pensioners highlighting membership earnings, financial performance, and the role of pension schemes in the economy. At the event, the fund announced a record payout of 2.79 trillion Uganda shillings to members, the highest in its history, with savings earning an interest rate of 13.5%. Let's now take a listen.
For financial 22-21, I declared 12.5%. Financial 21-22, I declared 9.65%. Financial 22-23, I declared 10%. And last year, I declared 11.5% for the financial 23-24. This year, I am glad to report that the fund has once again risen in the challenge. And I will not tell you immediately now. I would like NSSF members to note the following. 1, the interest rate I have announced, I repeat, at Uganda shillings 2.7 trillion compared to 2.0 trillion in the previous financial year. In monetary terms, this will be the largest amount credited to members' accounts in the fund's history.
In corporate news, MultiChoice Group has announced major board changes following the finalization of Canal Plus transaction. Jacques Dupour, Maxime Saada, who takes over as chair, David Mignot as CEO, and Nicolas Dandois as CFO have been appointed executive directors effective 22nd September 2025. Calvo Mawela, Timothy Jacobs, Christine Sawa, Dr. Fatai Sanusi, and Andrea Zapier have stepped down. Mawela will now chair Canal Plus's African operations, while Jacobs takes a senior finance role in the combined group. MultiChoice has also shifted its year-end to 31st December to align with Canal Plus, with interim results for the 6 months to September expected within 3 months. Finally, on News Now, the Ethiopian Securities Exchange has announced a new board of directors drawn from banking, insurance, capital markets, and development finance. Representatives include Awash Bank, Enet Bank, Ethiopian Investment Holdings, Ethiopian Reinsurance, Yala Insurance, TDB, and the Nigerian Exchange Group, alongside independent members. The ESX says the board will drive stronger governance and help build a transparent, inclusive capital market to support Ethiopia's economic transformation. I am Melissa Enoch, and that's it on News Now for today. Our markets round returns shortly after the break with Grace at the archives room. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace.
Hi, Melissa. Now let's track today's trading day, starting off with the equities. Here in Nigeria, the NGX All-Share Index closed on the negative, down 0.24%. The BRL in Abidjan rose 0.03%. In North Africa, the EGS slipped 0.10%, while Morocco's MASI rose 0.31%. And in South Africa, the Johannesburg Stock Exchange added 0.11%. Let's do a quick round on some of the Pan-African currencies. The Rand is 0.22% to 17.30 Rand per dollar, while the Egyptian Pound also firmed 0.05%. The CFA franc strengthened 0.26%, with the Kenyan shilling unchanged at 129.20. Meanwhile, the Moroccan dirham is 0.02%, and the naira was little changed at 0.02% to 1,492 naira 4 kobo per dollar at the official window. Let's switch into the commodities data deck, beginning with energy prices. Oil prices declined, with Brent crude down 0.90% at $66.08 per barrel, and US WTI lower by 0.72%. Natural gas rose 0.17%, and RBOB gasoline was down 0.98% to $1.95 as of 13:03 GMT. Finally, to soft prices. Cocoa led declines in the soft markets, sliding 4.35%. Cotton also dipped 0.14% to $66.20, and sugar slipped 0.12% to $16.12. Meanwhile, coffee gained 0.63%, and palm oil was marginally higher, up 0.03% as at 13:07 GMT. And that's our Money Moves markets today. Over to you, Melissa.
Grace, thank you so much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching, and bye for now.